Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. All right, guys. Well, hold on. Why is my music not working? Hold on. This computer. There we go. Also, would help to have lights on. Don't you think we should turn on these lights? We should turn on the lights behind. Hold on. Oh, I thought moving Jolteon there would make it you easier to see him, but you can't see him. It's okay. Don't worry about it. Hey guys, let's look at the charts and see where we're at today. Well, yesterday there was a little bit of drama yesterday. This is a big spike up after our session. Kind of looked to me like a flight to safety trade, but I'm not entirely sure. But it looks like they've given up a lot of it in the overnight, and now we're back up to that. So we seem to be developing a bit of a range here. S&P 500 looking pretty good, breaking out into a new area here. So we got to scroll out. How close is that to all-time highs? Pretty close, guys. It's only a little rock throw away. Here's oil. Oil still, yeah, well, there was overnight, there was a little bit of bearishness, but they recovered it. Overall, the trend is looking down in oil. It really does seem like that $80 is kind of a cap. Is the $70 a floor? I guess we'll see. Gold and silver. Well, gold was looking pretty strong yesterday, and now overnight they're breaking out to a new high. Gold is kind of like the only thing that really looks to be like super strongly trending up right now. I mean, I guess the S&P 500, but the S&P 500 is a little bit more restrained. Here you got silver looking pretty good as well, and copper. So all of the metals are looking okay. Although copper, it's coming to an area of previous resistance on daily chart. So we have to keep an eye on that. Japanese yen still looking good here. They kind of, they had a fallout, but they recovered that, and now they are trading within this range. But the dollar overall against other currencies is starting to look pretty weak. I think that a dollar below 100 makes sense. Who knows how far it goes? Not a huge deal yet to me. Bitcoin. Well, Bitcoin has made another attempt to stay above 60,000. So we'll see if they're able to maintain that or not. All right, so here this morning I did a little bit of work last night, so let's see if it works here. So I should be able to go notes, and then HX today. I still have to change this, but now I can do this. Flows. All right, so what do we got today? Well, I don't think that there's any super significant numbers. Well, we do have Canadian numbers. Doesn't look like the market reacted too much to that, though. We do have Bostic and Bar later today. It doesn't look like any bond auctions, though. Yeah, no bond auctions. Let's note strong overnight buying in gold. Seems like some momentum that might be worth noting. And we have Jackson Hole this week. Okay, which can lead to more constrained action. So that's where I think we are for our expected flows. So my expected flows, I suppose, would be constrained action slightly tilted to the long side. So if I really, really, really wanted to take a trade, I suppose this 10 is as good a spot as any. I'm not expecting a super strong trend though, so I don't really feel like a trade right there really makes a whole lot of sense. But you know, let's see what they do. Okay, now this chart over here seems to be having some issues. Let's reload the historical data for them. Excuse me. Yesterday, I made a sandwich. I think so. Like, I wanted lunch, okay? I'm like, oh, I guess we have this sandwich stuff that we need to eat. So can you make me a sandwich? I asked my wife. She's like, no, make your own sandwich. Well, her sandwich is better. I don't know what she was doing to it. So I'm like, you make the sandwich, and I will watch what you do with the sandwich, okay? And what I noticed she did almost everything the same way that I would do it, except for like when she puts the meat on it. You know, she kind of like leaves it in the way that it's in the package where it's kind of like curled up, so it sits on the sandwich. I think that that's kind of more of an aesthetic thing more than anything, but it does create a little bit of like space in the sandwich. It seems to make a difference. But then when it came for the mayonnaise, it's just like so much mayonnaise. So much mayonnaise. So yesterday, I'm like, okay, I'm going to make my sandwich. Except for I'm going to make it like Mike's style. So I'm going to put the olive oil and the red vinegar and the oregano on it too. So I do that. It was good. It was a good sandwich. But you know what? I think I put too much. I think I put too much mayonnaise on it. Because the whole rest of the day, I was kind of feeling like I have gunk in my throat and my bowels seem like unbalanced. I'm not going to say upset, but unbalanced. It was weird. So I think I ate too much mayonnaise yesterday. That's the point of that story. By the way, good morning, Octavius, A. Paul, Namrus, Uzi, and Rurd Orchestra. So the last name, Hoekstra. That sounds familiar, but the first name doesn't. So if you're new, welcome to the stream where we talk about sandwich making. So let's talk about what kinds of meat do we put. No, I'm just kidding. Well, at the moment, I'm actually I'm really interested in what's going on here in the S&P 500. They kind of got a weird little head and shoulders sort of pattern here that's breaking. Not that I think that that's a pattern that you can trade with any real probability, but it does make whatever the S&P 500 does next interesting to me. Oh, look, there goes the Treasury. So that happened awfully quickly. Not sure what to make of that. You know, we've had a lot of like fast, impulsive moves lately that you can't really figure out where they're coming from. You know, it seems like there's been a lot of that lately. Mohammed A.L. Arian noting that with another step up in price, gold has been trading this morning at new record highs. Yes, although they came back there for a moment. Like they fell and then started coming back up. I'm not seeing a super strong or clear move in the dollar, but the treasuries moved up a good 4 ticks out of nowhere, and that definitely is curious. It looks like, you know, when I said, hey, I think you go long here, we'd already be up $10. Should have done it. I should have done it. No, it's summer, and it's Jackson Hole week, and I'm expecting restrained flows. That's not really a trade for me. In fact, I really hesitate to say this because I'm not sure that this is the right call. I think that if I had taken that trade that I'd be taking profits, but I have a really strong feeling that this is going to continue up for a little bit more. It might be like a more restrained and steady trend from here, but I'm kind of thinking that they might continue moving up. I was laughing at a Ben Shapiro post there, but I'm not going to bore you with that one. Why might Ukraine want Russia to use nuclear weapons? Oh boy, please no. Please no. Yeah, I'm actually a little bit concerned about this whole Russia situation, man. Because we get this story that, like, they've made an arrest, or that they seem to think they know what was going on with the whole pipeline being blown up. And the story that we got from before, from a very well-known journalist, a very reputable journalist, in my opinion, was that the United States essentially ordered it, and he had all of these sources that went into the training and planning of blowing up this pipeline. And then when they make a arrest for it, the narrative that we get comes out, says, actually, they did order them to blow up the pipeline, but then Ukraine changed their minds, and the guy that they had, the general or whatever that they had asked to do it, got drunk and ordered his team to go and do it anyways. The way that this is trading now kind of is hinting to me that there could be a breaking piece of news out in the market that hasn't filtered out to the whole market yet. It's a little bit too aggressive. And everybody's kind of acting on edge, like they don't seem to know what's going on either. There is a lot of liquidity out there, though. So it could just be a large meta order. Could just be a trend. Which, if that's the case, given how much liquidity there is sitting out there, could indicate a really long-lasting trend that we might be able to jump on. Anyways, so there's that whole thing going on. That kind of sounds to me like, they found a Fall Guy story sort of a thing, so that the people that actually made the call don't have to face any repercussions for it. But then at the same time, Ukraine has made this huge excursion into Russia, and Russia is really, really pissed about this. I think that the idea behind making this excursion was to show that Russia is not as strong as many people think that they are, and that, show what the Ukraine military is capable of, and to kind of get a little bit of a propaganda win, because there's a lot of trying to take pictures and talking about it in that manner and stuff like that. But it seems to be having some unintended consequences. It sounds like Germany is starting to move towards, we don't want to fund the Ukraine war. Which, if Germany is not willing to fund it, why should the United States fund it? How do you sort that one out? I'm not saying that's the right thing or not. I'm just saying, like, that's what people are going to think. That's going to be the narrative that you're going to see emerge, right? And so it seems like that it's maybe actually hurting Ukraine's efforts. That some people are going like, well, this is just going to go on forever, and I don't want to continue throwing money into this hole. That's what it seems like is going on to me. There's another uptick, and some stops at 13.5. It's a real deal here, man. It might be too late to jump on board. I don't like the prices that I'm being offered in the micros, but it looks like there's a really something going on. Now, there is a pretty big iceberg at 13 trying to hold it. So that might be enough to get us to, you know, kind of chill out for a little bit. Wasn't there a peace deal close to being done a while ago, and the U.S. advised Ukraine to bail on it? I've read multiple stories, of the veracity of which I am unable to ascertain, which suggests that Ukraine and Russia were seemingly close to a deal many, many times, and that the West said, no, that's a bad deal, don't take it. So, you know, the issue there is Russia has taken a lot of territory. And if you just say, okay, fine, we'll just draw the lines where they are now, there's some problems with that, you know? Like, the precedent that you're setting is kind of problematic and kind of says, oh, yes, let's have a peace. You go back, build things up again, and then you can try again in 5 years, you know? Like, the West really wants this to be a strong message so that any would-be dictator thinks twice about going and trying to take territory. That's what the West wants. And so that kind of stands in the way of a deal. And you know what? Like, what the West wants in that case is not unreasonable or bad. Like, they have a really good point that you can't reward this kind of, like, land taking, right? Well, too bad there's money be made in war. It's a little bit more complicated than that, right? If you're going to go down that rabbit hole, I think you have to acknowledge that it's a little bit more complicated than that. Because on a whole, people make more money in times of peace than they do in times of war. But there are some individual factions that do make money from war. I don't think that that's what started the Ukraine war. I disagree with this narrative that, you know, like, okay, let's just say, alternate reality, Donald Trump was president, not Joe Biden. But despite what I think would happen, Putin still decided to invade Ukraine. Right? That's an interesting, bizarro world. I really think that a lot of the support and resistance, I think that a lot of both the support and resistance to the Ukraine war in both the United States and Europe comes down a lot to partisan politics. Like, if Donald Trump was the guy that was in charge and Putin decided to invade and Donald Trump said, hey, we're going to fight this tooth and nail, whatever, all of the Republicans would be on board. Seriously. All the Republicans would be on board. And I don't know if like the whole unused ammo thing necessarily makes somebody money. It's like they would have either destroyed or you know, used all that ammo and training and stuff. They were gonna replace it anyways. It doesn't seem like as of yet that a significant that they're making significantly more ammo, which is actually kind of a problem because they probably should be. You know, some of these things. So I guess what I'm trying to say, bigger picture, is that I disagree with the notion that we're only in the Ukraine war because the US needs another war to keep the military-industrial complex running. I don't think that that's what happened. You're short at 13? That is a little crazy. I mean, if there was anywhere to go short, it was right there, right? Because they overstepped a little bit. There was a little bit of counter trend. But so far, I'm not seeing really good signs that this order flow that's been coming in long is chilling out. And by the way, we're down to 30. Well, like at the start of this session, we were at negative 45,000 cumulative delta on my indicator, and now we're to negative 30. So that's been 15,000 net contracts in this over the last 10 minutes. The Lockheed share price, not really. Let's look at this. Like, this is another thing that drives me crazy, is everybody acts like the military-industrial complex owns everything because they have so much money and yada, yada, yada. But they're really quite small, relatively speaking, compared to other things. Let's see if I can get my charts to pop up here. Okay, so here's Lockheed Martin Corporation. They took a pretty big jump when they were at last earnings. Okay, let's add on here ES futures. On same percentage scale. Okay. So, like, yeah, that looks like a big jump, but when you come back to, like, let's just say the 2020 pandemic lows as an example, Lockheed Martin has underperformed the S&P 500 overall. If we were to come over to, let's see here, should we say October 2022? Coming into this area right here. Okay. The S&P 500 still outperforms Lockheed Martin. And it's only this last little rise here that Lockheed has really outperformed. Okay. So this is the first thing. It's like, oh, okay, there's a war. That should be, when did that happen? That was 2021, January 2021, right? Oh, actually, if you do it January 2021, Lockheed maybe wins out. Not since 2020. Kind of interesting. So it was really that rise right there that maybe kind of brings them up. Now, if I come over here to, like, Equafin. Lockheed Martin overview here. I was looking for where is the Where is the market cap? It's 133 million. Right? 133 million versus like Apple. Let's just do Apple. Apple's market cap is 3,434,000,000. Okay. So Apple is literally 60 times larger than Lockheed Martin. Right. I'm just sitting here like I don't see how a $144 million corporation is running the world, guys. That doesn't make sense. You know? Like, the reality of military contracting companies is that they make okay consistent investments, but you tend to not make as much on them because they essentially tend to just make a certain percentage of tax expenditures, and that's it. And so like the actual like growth part of it isn't really there. So like just from a market perspective, like looking at the companies and things like that, like some of the things that people say about the military industrial complex aren't true. They don't fit. They're not as powerful. Like why is everybody always so concerned about the military industrial complex and lets Apple do whatever they want? Right? Like Apple literally almost single-handedly destroyed Facebook by coming in and changing the privacy settings on their phones that pretty much everybody else was relying upon for targeting advertising and stuff like that. Right? Nobody ever gets all over it. In fact, I see people defend them. Like, what was the whole thing with Epic Games saying, well, we should be able to have our own store that you don't have to pay Apple money in. And they wouldn't let them do it, and there was this huge court case. And when I would go online, so many of the people supporting Apple. It's ridiculous to me. Oof, that short. Yeah, I hope that well, you know, even if you had taken it, that's like, what, 3 ticks? It's average loss, right? But it sure did lose quickly, though, didn't it? Maybe that's a good thing, though. Maybe that's a good thing. I tell you what, though. You're still seeing, like, lots of volume trading on it. So, if this thing is able to push beyond 16, I think that you're always going to have a tendency to touch 16, right? But if they're able to continue this pressure beyond 16, then we've really got a freak order flow here. Like, I'm really having a hard time theorizing what caused that long flow. I suppose, well, let's see here. So my original trade, I think I could have taken 3.855. So it looks like there was another $10 in it. But then this most recent move was just $5. So it wasn't a huge move, but that was still pretty decent sized. And the flow that was behind it was really strong, especially for this situation. Okay, how to access a DOM. Okay, so I think one of the problems that really confuses beginning traders when they come into futures market is understanding the futures market, because you would think that, oh, this must be just like the stock market or the cryptocurrency market, but just, you know, a slightly different instrument or something like that, right? Wrong. It's completely different. The entire regulatory structure set up around futures is a completely different regime, right? You are trading stocks, you have the Securities Exchange Commission. And their primary concern is about making sure that the securities that are out there and are trading on the exchange are properly vetted for the public, that there is a process that they have to go through to be able to become a stock that's listed and all of these sorts of things. There's certain disclosures that need to be made and all of this to ensure that people aren't just starting fraudulent companies and listing them on the stock market all the time. Okay. In the futures market, it's a completely different thing, because how do you register gold or, oil or whatever the thing is? It's not a company, right? So it's a completely different regulatory structure with completely different regulatory organizations. So the primary regulator in the futures market is the CFTC. And so because of that, you have a completely different regulatory structure for the brokers and things like that, right? And you also have a little bit more centralization, right? So with the exchanges, right, there's a couple of prime brokers, and they do the majority of the business over there. And when you go and buy a stock, chances are that your broker is just turning around and executing with either a prime broker, or they have some sort of a deal with Citadel or whoever with payment for order flow, which has kind of changed, but I digress. Okay. And so when in that space, you go and you pick a broker, you pick TD Ameritrade or whoever it's going to be, and that pretty much gives you everything that you need, right? The future space is different. So in the future space, probably the best analog to your broker is a futures clearing merchant, the FCM. So you have the futures clearing merchant. They're the ones that facilitate your access with the exchange. They're also the ones that, like, something's going wrong, they kind of cut you off or require more margin or whatever the deal is, right? Okay. And there's a lot involved in being an FCM, because you may have to manage things like delivering the actual commodity and that sort of thing, right? Okay. So then they have introducing brokers. And introducing brokers are primarily responsible for, one, like finding the clients, right? Doing all of the marketing stuff, and B, support for users. So if you have a problem, you probably call your introducing broker. And then if it's a problem, they would talk to the FCM if it was an FCM problem. Usually it's not. Usually it's just a technical problem with your platform, right? Okay. So then the introducing brokers will have agreements with platforms. So you will get, one, they will have a relationship with different FCMs. Two, they'll have a relationship with different data providers, and those data providers have to be able to integrate with the FCM. And then you've got the actual software, right? So there's this whole complex jumble of things in the futures market. And in the futures market, you can kind of pick and choose all of these things. So you can come in and you can say, I want to have this FCM. I'm going to use this FCM that has relationships with so many different introducing brokers. So I'm going to use this introducing broker. I want to use this data provider, and I want to use this platform, right? And then you kind of pick. So how do you sort out that mess? Well, there's two kind of gateways that I would recommend. The first gateway is pick the software that you like. So if you like the DOMs that you see on the screen, that is Jigsaw Day Trader. I am an affiliate. I have an affiliate link in the video description. You go and buy that. It helps the channel out a lot. That's how we're able to afford to make the stream so nice nowadays. Actually kind of done everything we need to do with the stream. So now we're just saving it, but I digress. So if you know which software package you want, then a lot of the other decisions become more clear, especially if like the software package that you want to use is NinjaTrader. NinjaTrader has a pretty sucky DOM, but the rest of the platform is great. and I really like it. And I kind of run it in parallel with my other platform. But if you're going to do NinjaTrader has their own introducing broker and FCM, and they have their own kind of specialized data. They've got a partnership with CQG. So if you want to go NinjaTrader, then your stack is basically chosen for you, right? Versus what I do with Jigsaw, I've got Jigsaw. Jigsaw can use multiple different data providers. I've chosen Rhythmic. And then because of Rhythmic, I use EdgeClear as my introducing broker. And then I think that the introducing broker is Phillips Capital. Or sorry, the FCM is Phillips Capital, but I can't quite remember at the moment what the other option was. And that's kind of my stack, right? So how to access a DOM in the futures market? Buy Jigsaw, essentially, or another software package with a really good DOM. Now, if you want a Bitcoin DOM, there are a lot of those exchanges that are providing their level 2 data out to the public for free. And so you can, you can go and look at these different tools that they have DOMs. They're not nearly as good as the DOMs that you got in the futures market. They do exist. You can also use Jigsaw for cryptocurrency stuff. Jigsaw does connect. Is it Coinbase? I think that it connects to Coinbase. Let's see here. New Gain, IQ Feed, Rhythmic, CQG, Tradeovate, Trade, TT, REST API, Stellar, Bitfinex, JX. Okay, so it's Bitfinex. They have a connection to Bitfinex. So if you have Jigsaw Day Trader and you make an account at Bitfinex and you connect to it, and then you would be able to get the Bitcoin depth of market over here on the DOM. Or you could just trade the Bitcoin futures. That's another way of doing it. Although watching the DOM on the Bitcoin futures is probably not too useful, simply because not a lot of activity happens over there compared to on the cryptocurrency exchanges. So it's kind of this happens in a couple of places on the CME exchange where that instrument is available so that their customers can hedge and everything, and it's there, but it's not the primary market for that. And so the amount of information that you can glean from watching the order flow in those instruments is not nearly as high as you can where that instrument is kind of like the most important place that trade happens, like it is with the treasuries, where some of the commodities like oil. Gold is a little bit more mixed because there's a lot of gold that trades on the London Metal Exchange, and there's a lot of gold that trades is it Shanghai? I don't know. There's a metals exchange over in China or over in Asia that's also a lot. So gold is a little bit more complicated in that respect. Oil, sweet light crude is the place, but there is like Brent crude, which trades on another exchange. Let's see here. The bridge sucks with Ninja. I've never had any problems with it. Do you know how it works? The way that the NinjaTrader Jigsaw bridge works is actually really fascinating. So because they're both C# applications, they can take advantage of the .NET CLR framework, which basically means that you've got this like machine environment that is managing all of the memory for all of the C# applications. And because they are all being managed by the CLR, that means that any application or any two applications that are both on C# can directly talk to each other through memory. So the plugins in NinjaTrader, they literally drop the data into a memory location, and then Jigsaw picks it up. the next CPU cycle. So the difference in latency between having your Jigsaw directly connected to the data versus having NinjaTrader connected to the data and using the bridge is literally like one CPU cycle, or however many cycles it takes for it to switch to the other program, right? So it's as fast as it can possibly be. What's your volume profile opening range setting? Oh, the default. I don't know. It was just, it showed up one day and I didn't question it and I didn't touch it. So that goes on the volume profile, right? Opening range, 30-minute opening range. To be honest with you, I don't care too much about opening ranges. That has been such a popular kind of trading strategy and like a popular swing trading strategy to some extent, but I've back tested that one and I did not find any edge in it. It's kind of funny. Somebody was showing me the other day this strategy that it had pretty good results over a very, very long time period. I would say, considering the length of the time period, it was better in many respects than some of my strategies. It didn't have the highest Sharpe ratio that I've ever gotten, but it was close. And that strategy was just go long a certain time and day of the week. Well, it was in currencies. Currencies do kind of have those kinds of tendencies, but that was wild. And that performs better than any kind of like opening range sort of setup I've ever seen. So just putting that up. What is the best way to learn C++ and Python? Start making stuff. Okay, so learning to program is a little bit different of a thing. You can go in and you can say, oh, I want to do X. I'm going to go and find this tutorial, and then it's going to show me how to do it. Okay. But the problem with the tutorial is that a tutorial has already done all of the work for you. And a lot of learning, a lot of programming rather, is things don't work out of, the way that you expect them to the first time. And you have to debug why and figure out why, right? And so to learn any programming language, that means that you have to get in and just start doing it. You have to have a list or do a program that has a lot of small projects. When I went to university, there was a new program due every week. New assignment every week with a new program that had new challenges and were teaching us different concepts, different algorithms, different data structures, whatever, right? So if you really, really want to get good at programming, okay, that's kind of what you have to do, is you have to come in and program every day and solve problems every day, which I feel like it works best in a class environment, but you could probably do it on your own with the right, there are free learning materials out there that I think could do that. You just would need to have the drive and the time to do it, right? Now, on the split side, if you really, what you want to do is you want to program for day trading strategies, okay? Then what you should do is you should just start making day trading strategies. Don't necessarily try and make the biggest, most ultimate strategy you've ever thought of before, but just make simple things. Make something that is a moving average crossover, and then make something that kind of messes around with where your stops and targets are. Make something that calculates the stops and targets each time. And it can just kind of get more complicated from there. And you can build up, of course, it's the same thing. You want to do the problem solving and build up this intuition for how to program, but specifically for day trading. And I think that learning it in NinjaTrader in particular is really not that hard, and you can get away with you do want to come in and like program every day or whatever, but you don't have to have a course. You can just, I want to do this. I'm going to look at this indicator and that indicator and backtest these things, right? And the thing is, especially in NinjaTrader, there's so much stuff out there, right? You can just say, okay, I'm going to go and pick a random indicator on the NinjaTrader ecosystem and backtest it, right? So learning to program for day trading, backtesting day trading strategies is actually a lot easier than people think. And then if you already know how to program, then it can be it can get really, really wild, because you probably know way more than you need to be able to do the programming part in NinjaTrader. I jumped wrong when you mentioned it in ZN and I covered it at 15.5. Well, that was an awfully lucky. I've never heard of a Murrah math. Oh, is that a Murray math? I have heard of that. I don't remember what that was. That's one of those things that like it comes up from time to time, and then when I go and I look at it and I I don't know if I ever made a back test for it, but when I look at it, I'm like, that seems kind of stupid. Murray math is dividing price ranges in eighths. Well, while we're thinking about it, this would be a good time to think about what is our market maker inventory cost levels saying. Well, if we come back to the inventory cost levels, it's going to be back to 10.5, which would be a little bit above where the origin of this move was. So there's a lot to give back if they do. But that's like way too big of a pullback, in my opinion. So it looks to me like what happened was there was a lot of delta behind this, but that the market makers did a pretty good job of getting out of the way of it. They did a pretty good job of getting out of the way of it. And then taking on a lot of inventory up here. And so like the buyer's cost basis is relatively low because of that. So that's interesting. That means that the robots, they saw this spike right here immediately and said, whoa, hold up a second. I don't think that we want to take fills on this. And then they just kind of pulled all the way up through there. It's an important thing for us to note here, especially since there wasn't anything going on in any of the correlated instruments. It really looks like it was the market makers reacting to the order flow that was in here directly. Now, if we do see a flip around, I think that kind of suggests that you're not going to have as many people, especially not market makers, off sides to like really drive a really strong reversal. Okay. So I think from this perspective, it makes more sense to let this range develop and wait for the next leg and see where it's going. Maybe there could be a leg to the downside. Good. It's so funny. I'm like, I don't remember what Murray math is. And then maybe I should go and look at it again and backtest it and everything. And then Uzi says what it is. And I'm like, oh yeah, that's right. Yeah, that seems dumb to me. Maybe we could use Murray math on daily charts. If we go back to 12, then you would look for a long again. Well, there, yeah, that is VWAP, I guess, yeah. Oh, yeah, you said VWAP. Durr. Durr. I really am still kind of like keeping an eye out for like, did they know something? Well, the last stuff that I see on my my news squawks on Twitter is Forex Live tweeting that U.S. job seekers rise to the highest level since 2014 in the New York Fed survey. And I don't remember there being a New York Fed survey release. Yes, out it on, and you can put it, I think you meant to say put it on, and you can see how often the levels are respected. You know, when I look at my inventory cost basis, and I say, you know, like these levels are respected a lot. I don't know if you could really consider this one a bounce, because like it came up to that level, and now like the profit is extended like way out there. So, I can't tell you how many times though that it's like, you know, some sort of a game-changing piece of news comes out, and they go like literally right to that price and bounce. It's eerie. And it brings me back to this thing that's like, how do you judge a line? Like if we have all of these different lines, you're using Murray math levels, this guy is using Fibonacci levels, this guy is using price pivots, and I'm using my inventory cost basis. And I think that my inventory cost basis is better than those other lines. How do I prove that? I mean, you could set up a strategy and, you know, whichever indicators is able to come up with the best strategy wins, sort of a thing. But you would kind of get curve fitting biases in there doing that for one thing. And for another thing, they're probably all going to be losing strategies anyways, right? So, but I still think there's something to my line. How do I prove that there's something to the line? There's got to be like a more useful statistical test that we could do. You know what I mean? Like, what percentage of the time that price level is touched, does it bounce? That could maybe be one way of looking at it. But like, there's so many different ways to use a line too that probably wouldn't be the complete thing. Okay, can you go into more detail about how you use your cost level indicator? So what the inventory cost basis does is it's kind of like an agent-based model. And there's two main agents in the market. One agent, well, I'm not saying this is the market, I'm just saying in the model there's two main agents. So it's really simplifying the market down. And it's basically saying every time that a limit order is filled, I pretend that those limit orders are all being filled by the same market maker. So I have two market makers, one that only market makes long and one that only market makes short. So the one that only market makes long, every time that a bid is filled, he's adding inventory. And anytime that a offer is filled, he is reducing inventory. Okay? And so based on all of those transactions, it's basically like you take the footprint chart and then like add all of these up, add all of the executions up on the bid side, and then subtract all of the offers that got filled against that at anytime that they have a chance to take a profit. I'm assuming anytime they have a chance to take a profit, they do. Okay. And then after that, what is their average level? Right. And what it does is it gives you a best and worst case, right? So I'm not necessarily saying that the buyer's cost basis is 10.5. What I am saying is that the highest that it could be is that 10.5, and the lowest it could possibly be is 0.8. Because in order to have an average position at 0.8, you would have to be taking them all short. Right? Now, the other thing that I do is because I assume that they're taking these little profits, it also gives me these stop out lines. These stop out lines are basically the point at which any market maker, there's no way that any of these market makers could be net profitable at this point. Okay, so that's what that line does. So how do I use it? I primarily use it as targets. So if I were to take a short and we were to start coming back down, depending on how I was feeling, I would be looking to take my profits at either 10.5 or 09. Basically, the scenario where it comes through and, you know, normally it will do this or it'll do this. Okay. But the scenario where it does this, like, it almost never happens. It will have to. In fact, I'm kind of questioning if it's possible. It has to come down here, bounce a little bit, and then go. If it's really gonna like trend down. Okay. So that means that if it comes to that level, and of course the line might change by the time we got out to there, but that means that when you get to that level, it's a really good spot to take a profit, is the way that I trade it. I have seen some situations where it's like it comes back to that and you can try and take the bounce and everything, but like the thing that I found really curious is that I can't really seem to predict when it's going to bounce or when it's going to start heading down towards those levels, at least not programmatically. But again, if I'm in trade for another reason, it becomes a really good profit taking spot. And I've tried doing a lot of backtesting because it's based on order flow data. It's really hard to backtest effectively. So I had a couple of strategies that I kind of thought were good, but there just wasn't enough data on them. And so they were overfitted. Essentially, I overfitted them. Well, there's 13. So they're coming back to that opening range. There's like opening range traders are going to get interested in it. You know what I think is a better trade overall, though? You know, I haven't identified a setup like this in a long time. But, you know, just as an example, VWAP. We're at 13, so I presume that Octavius might be taking his profits because it's back to the VWAP, right? But like, what if I knew that the reason that they were selling was because there was some sort of hawkish news out there? They hadn't fully disseminated to the market, right? That VWAP bounce is not going to work, right? I know what it's going to do. It's going to go lower because I know what the future orders are going to be. And in those situations where there's some sort of a relatively popular technical trade that I know is going to fail, I love to hit into those. Those end up being some of the best trades, you know? Yeah, 09 is the lower market middle. I basically say it as this is the average buyer market maker position, this is the average seller market maker position, right? So if it got all the way to the seller's average market maker position, then I would really, really strongly be wanting to take a profit. These ones, they often bounce off these ones too. But that's another thing is it seems unclear which side it's going to go to. But it always seems to go to one of those two sides. That may have something to do with the treasuries that like you have to know which instrument is being more dominant and look at it on the more dominant instrument, but I only pay attention to it on ZN. So. D says out. So wait, you got Ricky. Bravo, sir. Bravo. I mean, that was a dangerous one, but you know, making the play like short volatility, this is gonna fizzle out, probably was the right call. Had a little bit of a decent jump there on the open, by the way, for the S&P 500. Yeah, scratching it, that's good. Well, it's better than losing money at least. Angry old man demoted to midnight speech at DNC. I was seeing a thing that was his speech. Was that really not until midnight? I remember when it was like prime time, my time of day, that it was Hillary Clinton was speaking, and she was super animated. You get log in USD JPY. Why? How do you trade that one? Think that the treasuries are going to come back here further? I mean, that's kind of suggesting we should go short. You know what? Like, I could take it as a sim right here. I don't know. I do kind of think they might come back a little bit further. I don't know. I don't think the sim trade actually makes sense. Man, am I that tired today? Yes, last night, well, the night before last night was a disaster, and I didn't sleep very much. I took a pretty decent nap at lunch. I thought that then I should be able to have a good night's rest today, but I did not. I slept lighter, didn't have all my bed sheets, so maybe that was part of it, was that the sheets weren't heavy enough on top of me. And I didn't get to bed early. Actually, I got to bed late, so I didn't sleep as much last night. Bad night's rest. Found a cool subdivision that they're selling land, and I was like, ooh, if I was going to build a nice house, I should build it here. But it's probably, they don't list the prices. It's probably too expensive for me. It's probably like $500,000 just for the lot. Right. Anyways, let's come over to Zero Hedge and see what else they got here. So that top story is Biden's final indignity. CCP conducts emergency drills for pneumonia of unknown cause. Is the equity market decline over? Kamala Harris's radical left plan to ruin America. You know what? Okay, so can we talk about price gauging for a second? I'm being facetious here with calling it gauging. It's just she was calling it gauging. Like, here's the thing with the whole price gouging thing that I think everybody is missing. And again, it's one of those things where it's like, this seems like an important piece of information. How come nobody's talking about it? So what is this key piece of information that I think is worth noting here? Kamala Harris went to school for economics. Her major at university she went to was economics. How do you go through a whole economics program and not know that price gouging, the whole price controls, how can you not know that price controls has a long history of failure? Well, some might say she just wasn't paying attention in class, but I don't think so. I really don't see how you go through like a whole 4-year degree or whatever it is and not know. So my only conclusion is that she knows it's a bad policy. So really, this whole episode that we've seen with Kamala Harris, you know, talking about corporate greedflation and all of that sort of stuff, really what this shows is that Kamala thinks very little of the American public. She knows that it's a bad policy, but it doesn't matter because she knows that people will vote for her anyways and that it will get people animated, even though it's an absolutely terrible, terrible policy. That's what's going on there. Except for that one thing happened that I don't think that she expected, and that was that the media looked at that and they said, well, hold on, wait a second. We all lose money when that happens. That's really bad. And so the media pushed back against it very, very aggressively, and it didn't work in her favor. I would expect her to avoid talking about that subject in the future, but we shall see. We shall see. Okay, so Octavius is taking the VWAP bounce. I'm kind of a little bit, I feel like that move that we had on at the beginning was a really good move, and that it's unrealistic for me to expect a whole lot more action from here. But you might be able to take ticks out of it. The S&P 500 so far off of the open looks beautiful, but usually when they start rallying this hard off of the open in the S&P 500, there's a really big pullback or, pushback of some sort, right? So now I'm thinking I need to do, one other thing that I should do here. This right here. So I did this. And oh yes, see, I'm glad that I went into this. I did both of these. So I was trying to determine if I had a video editor and I wanted to pay for 2 terabytes of data to Blackmagic Design to use their cloud solution for doing video editing, like, would I be able to afford it? $60 a month is enough in our monthly budget from what the YouTube channel makes to do that. And it looks like we do. It looks like we could. Now, the problem is I set that up and then we don't actually do it. Then it's kind of a waste of money, right? It's a pretty big waste of money. But it is an option. And so I think my conclusion after all of that, of course, I could set up like FTP and all of those sorts of things. But I think my end conclusion is that if we were going to do something with a video editor, that the best thing would be to use Blackmagic Cloud. So I did do that stuff yesterday. Oh, that's right. I was going to paint the dog kennel, and I didn't do that. I was gonna be like, okay, guys, I'm gonna start the stream and just leave it going. And nah, I'm not doing that now. Might do that on Friday. If my wife doesn't find a time to do it, I might do it on Friday. These are all of my silly little house projects that I never get to because I'm too ADHD. I have this spot of carpet that's like just absolutely trashed, and all I gotta do is call somebody to have them come and fix it, and I just never do it. Well, VWAP bounce trade is looking pretty good, man. 12.5 to 15. I don't know about new highs, but back pretty quickly there. I think you could chalk that one up to, they're going to have a tendency to slip back into the hole. So this move back to 15, I would not necessarily read as, oh wow, the longs still really want it. It still looks really powerful. No, they're likely to slip back to 14.5 just off of, you know, the normal behavior, normal activity. I'm not seeing enough long coming into that to make me be like, oh yeah, here comes another leg. But it could happen. Wow. Alex Jones is tweeting that the Russian government is going to compile a list of countries poisoning minds with twisted ideas, and the foreign ministry is gearing up to issue visas to true patriots as soon as September. You're not a true patriot if you take a visa to Russia, man. But okay, whatever. President Kamala Harris on Thursday refused to debate former President Donald Trump in a third proposed matchup the former president suggested. Harris, who refused to answer on August 8th if she accepted Trump's 3 debate challenges, has only promised to show up at 2 events, according to the Harris campaign statement. Harris agreed to debate Trump September 10th on NBC News and again sometime in October. Trump offered to debate Harris on September 4th on Fox News and September 10th on NBC News and September 25th on ABC News. After Trump debated the then presumptive Democrat presidential nominee, President Joe Biden, the president, blah, 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 blah. Wow, that Breitbart article was awfully short on details. The rest of it was just not relevant. Well, I really hope that they do a debate. I think that it would be in Trump's best interest to have a debate. I think it would be in the American public's best interest to have a debate. I'm seeing all these people saying, like, you know, like what our policy platform is going to be doesn't matter. Like, just vote for me and then, you know, we will see what the policy platform is. And I think that that's a very, very dangerous precedent to set for democracy. That we don't know what we're voting for. I don't think that you want to normalize that. I very strongly feel that we should avoid normalizing that. Russia to give Trump and his supporters asylum if he loses the election. Oy. Boy. You know what? That would be really damaging for America. Like if Trump lost the election and then a lot of people did decide to move to Russia because of that, that would be really bad for the country. Like that would hurt. You would see that in like lower economic growth and things like that. By giving a path here. You might be right. Because that kind of looked like another one of those, you know, like 15 and 15.5 pulling. Basically, the latent liquidity in this area is still a little iffy. So if we were to say that we reached this equilibrium point at the top of the hour, it has been 50 minutes. So it could be time for another leg. I would want to see Delta for me to take another leg, but it could come. Back. Maybe I should be a little bit more vigilant here. Obviously, if I was going to take a trade, it would be better if it was below 14.5, which is kind of like it's the point of control for the session, in fact. 48,000. I don't know if you could get that anymore now, though. No, I think you probably could. At least 14. it wouldn't surprise me to be like chomping at the bit long. I'm chomping at the bit long here, and then it fizzles out again and ends up going low, much lower. Only problem with that, though, is that there's still the why did we float up here the way that we did? Offside trades. I don't know. Like this whole like pullback from when we touched the VWAP and back, it's the volume's been flat. I suppose there was a move in the Japanese yen, and we might be able to blame it on that. But then, like, what's the yen gonna do if that's what it is? What you got here? Is this your weekly options expiration? There's just one to take note of on the day as highlighted in bold. I don't see it. Euro USD at the 1.11 level, which is a little bit below us. Spare also has a large set of expiries at 1.1, but that should not factor into play given the dollar weakness so far this week. But I mean, it looks like we're at 1.1116. So we're 0.0016 above that. I'm not so sure that like the dollar is going to come back with a vengeance here. I know, so far I haven't really been able to see kind of the, you know, the hand of the options positions in the behavior of the market in the Forex stuff in quite the way that I have in the S&P 500 stuff. Like I feel that I lost the thought. I lost the thought. I feel that if you're going to trade the S&P 500, that knowing that stuff about where certain options positions are is essential. Like I kind of think that you'd have to know where those are. I also think that you have to know, I would have to know more than I do about certain hedging strategies to be able to discount some of the volume that we get over there as hedging. But my larger conclusion is it's too complicated to do it by hand with the knowledge that I have. So it's probably better to just leave it alone. You're going to attempt another short there? Why do you like it short there so much? I don't understand. See, I think I understand when Octavius makes his trades, because he's doing a lot of, this is the direction that the momentum is going, and then he takes it to a certain spot, and then he trades it back to the VWAP or the bounce or whatever the deal is, right? But you seem to very often want to trade against the momentum in weird spots. Like at the very least, if I really strongly wanted to go short, I would prefer to have my position above 14.5. Why is that? Because the tendency is going to be to get stuck at 14.5. Like, we are in the short-term mean reversion period. We're well past that. Like, the liquidity should be healed, and the market's still not moving. That says to me that there was one large meta order that came in and bought here, and now there's nobody else to follow that up. So there's going to be a really strong tendency to just rotate around 14.5. So if I am going to go short, I should be able to get at least one tick from that tendency for it to slip back into the hole, or into the middle of the range, rather. I mean, the hole's not there anymore, but you can see the spot and the point of control on the volume profile. It's curious to me. They seem a little bit hesitant to hit the 13.5. Do you see that? 9 contracts went off, but the bid has not reacted at all. So, like, the market makers seem to be look confident that 13.5 is a good place to bid at the moment, at least. And the market orders are very reluctant to hit into 13.5. And we're not getting super clear order flows or anything like that. So that's another kind of a read that we can make on the DOM here at this time. Right? I would say they still have a lot of liquidity on this DOM. So I don't like the 5K on the bid. Well, normally 5K on the bid would like really stick out to us, right? But today it's like no big deal. It doesn't look like it's just going to pull, though, does it? It looks like that if they trade 13.5, that it will probably take at least 3,000, if not the full 5,000 contracts to go through it. Those bids do not look scared at the moment. Tornado or concentrated downpour. Oh yeah. This is the last night in Utah. We had such a big thunderstorm, and I was like south of it, so I got up on the side of the mountain and looked at it and got a really good look at it. And this guy posted a picture on Reddit being like, was there a tornado? Was that just a concentrated downpour? Now that is like, you can see the water coming out. That's the water coming out. But that is the kind of storm that will give you a tornado. Like, seeing that here in Utah was a little bit like, what? That never happens. That never happens. What? Trump shares AI generated images suggesting Taylor Swift endorses him with a caption, I accept. Oh my gosh. I saw the whole thing of people saying like Swifties for Trump and everything, but I'm really surprised that Trump would post that. But maybe I'm starting to come to the point where, you know, because I see him endorse things on Twitter all the time, but I'm kind of like, you should be a little bit more careful, don't you think? But I've come to the conclusion that, you know, his attitude is, oh, it's social media, it doesn't matter. I think that's what he's saying. He could be intent. He might even know that it's false and be doing it to you know, to get everybody uppity about it, because you know, if you can drive a wedge into Taylor Swift supporters, what would help you? It's so weird talking about like that Taylor Swift could have an impact on your election chances. Seems so dumb to me, but here we got about an hour left. They did come back a little bit further. You want to fill at 13? You might get that one. It looks like it'll be a little bit tough, but I think that you got a good chance. Although, I don't know, I'm thinking about it. I would possibly be nervous. I don't know. So like what I'm noticing right now is bid and offer are equal. Oh, they just flipped and the offer pulled, but they are maybe a little bit. So you're getting enough pressure that you could see them trade into it, but so far you're not seeing them do it. This is the one where you like, you get too scared and you mark it out at 13.5 and, you know, miss a tick, and then it actually does fill and you're like, oh man. Or like after it fills, it like goes 2 more ticks. Oh, by the way, that reminds me, I was supposed to get a package yesterday and it didn't come. Is there a Ninja Trader You know, I don't think that there is. Maybe there is, and I just don't know about it. But I don't think that there is. But if you go on the futures trading server, you can get support for basically any platform out there. There's going to be somebody else there that knows what's going on and can answer questions usually. Better. It was supposed to be like it was there at the facility and they said that it was going to be delivered yesterday. But I think that the guy that delivers out here was long gone before it got to the facility or something. I don't know. Like it got delayed. So maybe it will come today. We'll have a headrest. Oh, look, there you go, filled. Yeah. It was only 1050. Although this is still kind of like a range between 14.5 and 13, right? He's never going to take the blame. Trump's campaign struggles as he ignores strategy. It does seem like all of the Republicans feel like that Trump is not being disciplined the past 2 weeks. But I kind of feel like that the reason that he is stopped being disciplined is because it seemingly stopped working. Ugh. I'm browsing here on Reddit because I don't know. It kind of seems like a quiet day news-wise. They have, and on Advice Animals, there's douchebag girl has OnlyFans, uses dating apps to solicit subscribers from matches. That's low. Can't imagine like you get a match and you get all excited and you talk to them and it's a real person and then it turns out that they just want you to subscribe to their OnlyFans. No, thank you. Hold in place. Anytime I get frustrated with my wife, I remember I am lucky to not be in the modern dating scene. Well, you know what? There wasn't OnlyFans, but there was definitely that sort of stuff going on. Tinder was a thing when I was dating. But I think it was better in Utah. What? A third of Americans plan to retire on Social Security alone, but it may not be enough to give. You've got to be kidding me. Really? I hope that they don't actually think that that's the way to do it, right? Like, I could see, oh, I know that I'm supposed to be saving, but I didn't. But if you really thought, oh, I thought that you were supposed to live on Social Security alone, there was like a really major fail in educating people there if a third of those people are thinking that. Holy crap. Don't rely on Social Security for your retirement, folks. Put the money away in your 401k, in your IRA. Put as much as you can. You're probably going to need it. Okay, so it's kind of dancing at 13 now. Half. Is he gonna come back across this again? I mean, we have enough time. It could maybe come back across this 2 or 3 more times. The rate that this has been going. Man. It's still really curious to me that we had that super strong rise at the beginning of the session, and there hasn't been any kind of like, well, what was that about? And like, you know, the market is pretty much, I guess maybe it's just liquidity is just still weird because of the summer. But I tell you what, I've never seen it where like over the summer, the liquidity is rising to like 5,000 and 6,000 a price. That's unusual to me. I mean, if it's going to be that high now, what is it going to be in September? You think the yen wants to test? Well, the yen is making a little move there, isn't it? Yeah. The yen and the treasuries look pretty strongly correlated, but with the flows and everything, it's a little bit unclear because you can get this thing where the Japanese yen is just following the treasuries and vice versa, right? So which one is moving? Sometimes it's hard to tell, unless like one or the other is moving really strongly relative to the other, right? Like the Japanese yen had a really strong push and the treasuries just kind of followed it, even though they didn't want to. A Babylon B says, study finds polls are only accurate when your candidate is ahead. So I'm kind of thinking back to my original notes. Well, I didn't write it. I was expecting limited action slightly tilted to the upside. It kind of seems like to some extent we're getting that. It's just like there was this really strong flow at the beginning of the session that I wasn't expecting. I am seeing cumulative delta rise with this one again, though. So this gets me back to, should I be watching this one? Well, last time I was sitting here and I was feeling this, it came back really quickly, right? But I said, I need to see some cumulative delta changing in order for me. Now I am seeing that cumulative delta changing. So maybe hitting that 383 in the micros could make sense. I do have enough time left over for it to try and make it work. Still feel a little tired though. Well, let's try it, Sim. Let's try it, Sim. We'll do it, Sim. We'll do it, Sim. Oh, well, I don't know if that one's gonna fill. No, they're gonna leave without me. Well, you know what? Let's put some limit orders in here. Or some stop limits, rather. Okay. Hey, I got filled on that one. Not bad. Not bad. Take one there. If I'm so lucky. I'm gonna have a tendency to like over focus here and fall asleep. I needed to keep myself yapping a little bit. There's this subreddit for what is it, Tucker Carlson, which I've never really participated in a whole lot, but it was just, you know, like I wanted to see what the right-wing people on Reddit are doing. And that subreddit has basically turned into people complaining about getting banned from Interesting AF. It's kind of like the Advice Animals subreddit has been taken over by the stupid Men's Warehouse guy. It's like, Donald Trump's gonna do this, I guarantee it. Donald Trump's gonna do this, I guarantee it. Like, when did it turn from Advice Animals to shitty prediction animals? Seriously. Okay, so it looks like the other one went off too. Iceberg at 16 should be expected, but I do think that I can get a little bit above that. Let's see. There is a big iceberg there at 15.5, so dude, if this just like careens back down and that's the like they only kiss 16 and then turn around, then that will really suck. We did see, though, a pretty convincing breakout in the Japanese yen higher that seems to be dragging the treasuries along. But there is delta on this one, so that's why I decided to play it. I probably should have done this one live. I don't know if I would have made, I don't want to take a live trade unless I'm going to make at least $10. And I don't think that I would have made $10 on this. But the primary reason, so that might have been one reason to have not taken it live. But the other thing is just that I really didn't feel like I got a good night's rest still. So might be a good reason for me to be a little bit hands off until after my elbow surgery on Thursday. That's a little bit, I was starting to get a little bit scared about it the other day. It's like, should be no big deal, right? When they did my nose, that was no big deal. I don't know what it was that was all of a sudden kind of making me nervous about it. Guess I've never had I don't know. Anyway, weird. I wonder if they'll let me keep the bone spur, though. That would be kind of cool, yeah? Check your... Oh, I didn't see. Yeah, let me read here. I could read right now. Nothing's going on. I don't know. So you're posting a footprint chart to me here. But I wasn't necessarily actually, it's more complicated than that. So I would say that my own read on the order flow this morning was, okay, we got a strong move up. I kind of wish that I had gotten on board that earlier or traded it from the beginning, but I wasn't expecting a strong flow like that. I did expect flows that, was in that direction. So I don't know if that was like a good trade or not. But then after that, I thought, it's probably going to range through here. And it did. So you might sit down and say, oh, okay, well, so if that's what you think is going to happen, then why don't you just take trades across that range, right? But every time that I try and make that play, it doesn't work. Every time I try and make that play with like one lots and everything, like I misjudge the range or it just immediately breaks out at that point. Like I've never been able to get that trade to work. My policy is that I only want to be taking trades when I think there is a really strong persistent flow. So this sort of a thing where we're getting mean reversion, right? Cumulative delta is pulling back. It's just retracing the strong long trend that we had, and price is trading sideways in that area. I avoid those areas. Yeah, you can make this. You could do this, right? Trade that 3 times. And I think that there was somebody today, because Octavius took this, and I think D took this and this, right? Like, yeah, you can. It seems like I always see people that are playing those ranges and having success with it. But I really feel that we don't really actually have an edge there. I think that you're just taking on risk in a range. You can make money from taking on risk in a range, but that's not like a long-term good trade, let's say. So I do wish that right when we came in here that I took a trade at this. I could have gotten from here to here. That would have been a great trade. That would have made a great trade. I wish I had done that, but beyond that, it's kind of like, on that delta, when would you take the trade? Well, so I did here take a tiny trade because now we started to see the delta continue up, right? Like this move right here, let's call it move 1, right? cumulative delta did not read correctly with the change in price. So when we came back up there, I was kind of looking at it like, maybe we could get that breakout. But I said, no, doesn't look right. I'm not getting buying. This could have done this, and then maybe I would have gotten in and taken the breakout, just like what we're doing here. But this one was where I said, okay, I can see here. I chased it a little bit, so I didn't get the prices that I wanted. I got basically 15 half. But then that did continue through. Now there's a lot of liquidity on the DOM here, so I'm not really looking to like extend these, but I might actually be able to, okay, that's not too bad. I'll take both of them though. I don't want to mess with that big order at 17. That big order at 17 is a little scary to me, right? Yeah, that is a divergence. That is a divergence. Price went up, but cumulative delta was sideways to down. That's a divergence. And my back testing and the information that I have suggests that when cumulative delta and price are not correlated with each other, that it's not worth trading it. That it's hard to have an edge in that situation. Right? Like if there's a large meta order, if somebody really has to buy a lot of something, there's going to be that imbalance in the cumulative delta, and it's going to persist over a long time. Just like we had here today, because we did get two pretty big legs. Wouldn't surprise me to see a third leg later. Because it takes so long for those guys to execute that trade. That's where we can have an edge. Is that we're fast, we're nimble, we can kind of see what's going on, we can judge based on what we know about the market, why that particular person might be buying, and there's certain things that we might be able to glean from price levels based off of that. And we can read the order book so we can kind of see where the best places are to try and just make a few ticks and whatnot. That's the ideal place for us to trade, is when there's that large meta order is active. If it's not, if we're getting the mean reversion behavior, that is more favorable to the market makers than it is to us. You can make money from taking risk in that range, but then your edge is the taking on risk, right? And I don't like that being my edge. Bring that chart up again. Sure. Price moved up. Do I need to make it a different color? What's the best color to use here? I think the yellow is the good, and it just should be pure yellow. Okay. We moved up, but cumulative delta was sideways to down. So they are not correlated. No trade for me. That simple. Second move, cumulative delta. Sorry, cumulative delta is down here, price up here. Highly correlated. That's when we want to take a trade. Same with this one right here. Highly correlated. Those are where we want to take a trade. We want to predict these before they happen. On to this one, I didn't really catch on to what was going on until about here. So I was a little slow on that one. I was lucky that I was able to get some more out of it. I was saying maybe I could get 16.5. It looks like I could have gotten filled there. But still, that one's going to be tight because I'm late to it, right? So it did, when it did get there and it really started to become so clear, then I did take a trade just on sim, right? On the second low, why was the divergence important? It was not important. Important is not the word that I would use. Is it important when you're not taking a trade? Right? But right about this, so if we really zoom in, you really want to zoom in and like really pick my mind about it, right? Okay, we came down to here. This was your first sign right there. There was a bar where the change in delta was a little bit more than they had been. So that was kind of your first hint. And then there was this one right here, right? So by that point, which is essentially where I got in at, right? I essentially got in right there. Okay. That was the point at which it became clear that the cumulative delta was trending up, right? That's how I'm doing it. So all of this stuff right here, I don't care about it. I look at it and I say, that means don't trade. Don't trade. But oh, hey, wait. Some persistent imbalance in cumulative delta in the direction that I wanted to trade for today, and price following it as well. That's a trade for me. That's a trade for me. I want to predict it. I want to get into this as early as possible. I would have liked to have been more in here than in here, but it's okay. You take what you can get. Well, taking that trade and it working out and making essentially 4 ticks on 2 contracts has given me a much greater boost in neurochemicals than I think it should. Because it was just kind of like a little... it wasn't the best trade. I mean, it was rough, but it wasn't great. It wasn't anything special or amazing. I guess if every trade could be like that and I would always won, then I would be okay with that. Let's see here. Mr. Seth, can we say that when the price is not correlated with cumulative delta, the passive orders are driving the market? Yeah, you could say that. Let's not use the word driving the market, but let's say that the passive orders have more of an advantage. Or let's say that the market makers have more of an advantage. You didn't get for your fill at 17? Yeah, why 17? You know, like, it's actually kind of weird how that all fell out, because I said 16 half, didn't I? Yeah. I got out at 16 half, because there was a big order at 17, and I said, I'm going to get out. You know, like, I think that they will probably trade 1 tick beyond the 16, but I don't know if they'll get past the big order at 17. Could still do it though. I mean, like, they pulled back, they're coming back to 16. Like, it looks like they're gonna start to try and develop a range there. That range is awfully close to the 14 half. They might try and push it a little bit away from that. No, wait, English still, yeah. It's. But I think that the bigger thing is that when there's a large meta order, we're likely to see a persistent imbalance between market buys and market sells. And I want to ride those large meta orders, right? Versus the market maker is in charge. Okay, well, in this case, they kind of range the markets between 14.5 and 12. Okay, but what's to stop them from going, oh, let's bust the range here first, get everybody to enter in long, and then turn it around? You know, like, I think that that's a situation where there's less volume in the market and there's going to be less influential players, right? And so the market maker kind of has all of the power, and all the market maker has to do is watch what the retail traders are doing and then do the thing that screws them up the most, right? And so it doesn't matter what because if the retail traders see a pattern there and they say, oh, okay, when that sort of thing forms, it's a range, and they just trade back and forth the range. And you see that, like, D had a little bit of success with it today. Octavius had a little bit. So then you go, okay, I'm going to try and identify those ranges and then just trade across that range. I'm kind of thinking that myself right now. But then something goes back in my mind and says, well, yeah, so for that, like, as soon as we start trading it that way, the market maker will change it. Because the market maker is just responding to what you do. So I'm not really sure that you can really, that it's a good trade, you know, like trading in that area, even though, like, it seems like in today that it worked, you know. Now, one thing that you maybe could have done is you could have said, I think that this is going to continue through, but we are getting a range, so I'm going to come in and I'm going to take it long at like 12.5, and I'm going to do it with 2 contracts and take 1 contract off at 15 and then let the other one ride. That probably would have worked really well. But that's really more a bet that's kind of combining it, right? I'm betting that we are more likely to have a trend long, and I want to have a runner so that if we break out, I can take advantage of that. But I'm also going to take on the risk in the short term to kind of give myself more room to run so that if it doesn't materialize, you know, it can actually go against me quite a bit, and I can still scratch it, essentially, right? The only problem with that is if you take the fill and it just continues to trend against you, which happens to me too often. Has happened to me too often. Oh man, and now you're showing me like too many pictures. Is that, you have that many desktops, D1? Oh my gosh. That's too much. It's too much. And you have them on big charts too. Here on Reddit, I'm seeing now a story. Misato will be a playable character on the Nikke X Evangelion collab. I don't know what this game is, but it's got the best girl in it, so it's worth looking at. Then I come over here and I search for the game, and I'm like, oh my, there's some hot anime chicks in this game. I should shamelessly play it with my sons just to piss my wife off. That's what I think should happen, perhaps. I feel like I needed to use the book and the order flow, and cumulative delta was a lagger. Well, yeah, so that is one thing, is that cumulative delta is kind of a lagger, isn't it? You know, like, by the time that trend in cumulative delta is really conclusive, that's like right where it stops. Really seems to be the case. Whereas you can be watching the book down there, and we actually did, I think we did an okay job today of pointing out when we got to those spots that, like, they had clear and open looks lower, and the market orders just weren't going for it, right? And the limit orders weren't pulling. They seemed confident about those bids. So I don't know if that's enough to get you into a trade, but it was kind of a tea leaf that in this instance ended up being pretty instrumental. Yeah. At 12.5, when they did get lower, you would expect to see them hitting the sell side, but it actually didn't this time. Yeah. Like, one of the things that I'm trying to get you on here, though, is trying to get you on board the informed trader train, right? Because you in particular, D, seem to be really interested in technical things. And I'm just saying, well, your chart can say all that it wants, but you have a piece of informational edge that contradicts that. Guess what's going to happen? Guess which of those two is going to win, right? So I would really prefer to have some sort of informational edge that strongly suggests to me a certain direction. I think that today we did have a piece of information that suggested that we should be long, not as much as we did, but long, yeah, sure. You know? What do you think about the 3-day cycle trading mythology? Sounds like nonsense. I've never heard of that before, though. Never heard of that before. If it involves holding the trade for 3 days, then that's maybe interesting. Because you're more likely to find an edge on a spread. You feel that the cumulative delta has that edge in addition. Well, I think that everything has that edge in addition. Like that's the issue. Is what I'm telling you is information that strongly predicts future order flows, particularly informational inefficiencies, have way more edge than anything that we're looking at on the other side. Whether it's, you know, chart patterns or cumulative delta or order flow signals or any of that. Okay. Like just so think of it from this perspective. Let's just say, for argument's sake, that I need to buy 60,000 contracts today. And like I was already buying today, but I still have 60,000 to buy. Okay, well, guess what? As I buy, the market's going to move up. The market's going to move up, right? I don't want the market to move up. I don't want them to know that I'm going to buy. I would prefer them to do all sorts of things to make everybody think that they're going to go short. So one thing that I could do is, if I'm providing 2,000 of the orders out here on the liquidity, then I could say I'm going to set my robot to pull more easily on those bids, so that price slips and falls back down. And then when it gets into that spot and it's in a price that's a little bit more favorable to me, I can like be sneaky and iceberg and kind of spread it out over it, trading in that area for a really long time, and I can get a lot of those orders filled. Yeah. So then everybody sees that, starts trading it a different way. They don't sell, they buy because they know that they think that I'm going to buy because they saw some pattern or whatever. I might do the opposite. I might like buy it up. I could just buy it to begin with and let everybody chase it. Or I could buy it, fake breakout, and then, you know, when they all sell into that, buy it again, right? Like if I have that kind of control over the book, you can kind of coerce certain things to happen. And you can change what that thing is based on what everybody else is doing. So how do you build an edge in that situation? Well, the edge is knowing that that big guy out there has to buy 60,000 contracts. And if you know enough about the market, you can identify situations where there's going to be players that have to do that sort of a thing. And those are the large meta orders that you can ride. When those happen, you know, another scenario could be, I need to buy those 60,000 contracts and I'm really desperate. And I'm just going to come in and I'm just going to buy the orders that I need to. I can't afford to mess around with it and let it pull back and do all of this kind of nonsense. I just need to buy it now. I don't care what your cumulative deltas said or what the current trends and, you know, kind of metagame is around certain price action signals and all of those things. It doesn't matter. I'm going to buy and I'm going to plow through anybody that stands on my way. If somebody comes in and says, oh, you've gone too far, or I'm going to sell it now on you, great. That means I got filled at a lower price than I would have otherwise, right? When you're in that situation, when there's a meta order in the market, it's the only thing that matters. And looking at all of these sorts of things, like looking at the ripples and that sort of a thing, right? You're watching the ripples and not seeing the tsunami that's coming your way. Now, conversely, if you know there was an earthquake and you know that the tsunami is coming, then watching the ripples might be interesting. And you realize, oh, hey, the water is pulling back from shore a lot more now. You know, like all of these things that would help you see that, yes, there is indeed that tsunami is here now, right? That's kind of what it's like. The primary edge is still, you still want it to be informed trading, because there's more edge in that than anything else. All of these other things that we've got are intended to support that primary edge. Reading the order book is one of them. Looking for confirmation from trending cumulative delta is another really strong one. I like the tsunami analogy. I do too. I use it a lot. Did you guys see the toilet bowl analogy that I shared on YouTube Shorts the other day? Let's see here. At 8:42 a.m. using 1 minute on Eastern Time. Can you explain that with your thinking? It seems to have all that you just talked about. Yeah, well, but I mean, I feel that move surprised me, right? Is that right here? Well, so here's one thing. Again, sometimes you'll get these sorts of things, right? Like this one bar that just really sticks out. That was like a strong take. Like when that happened, we knew something was up. I was kind of like, well, it could slip back. Like, is it news? I don't know what's going on. We kind of suspected that there could be some meta orders, but that they would be limited. And I think that what happened was that I was correct on that, and the meta orders just had a much stronger impact than I thought, right? But let's just say, for the sake of argument, that it's October. and that I slept really well that night. And I see that jump up and I go, oh, you know what? I was expecting there to be some meta orders to the long side, so I do want to buy in through here. And I see that. I'm going to be trying to bid at 11.5 or maybe 12, trying to pick that up. At that point, I can't see all that, right? I'm only seeing this. Actually, let's change this for a second. Properties, right side margin 50, something like that. Oh, it's got to be way more than that. 150. 300. Pull it way far back so you can see. Okay. So, at that point, we're like this, right? Ooh, hey, we kind of broke out there, and I'm expecting flows along. That means this is only getting started. I'm going to go long in the anticipation that I'm going to see cumulative delta continue to rise, right? And then what happened? Oh, it did. Okay, now something happens. You form a liquidity hole. A lot of volume goes off at 14.5. It starts doing this one tick range thing around it for hours and hours. I get out. I get out there, and then I say what happens. Oh, it's coming back down. That's just short-term mean reversion time period. Here it came back up. Cumulative delta still not rising, so I'm ignoring it. Now here on this one, oh, actually, maybe we're getting that. So if I think that strongly that there's going to be another leg, I can get in here. And what happened? It came out. You didn't have a whole lot of time to exit, but I was able to pull it out. I was able to eke something out. Right? And that's what I'm trying to do, essentially. Change this back to like an 8. Today, I don't think that we had a really strong informational edge. I did kind of guess that it was gonna, and that was a little bit of intuition, but I wasn't getting like a super strong sign that like we could continue to move. I think one thing that I could say was that yesterday was pretty active. I'd say that today was pretty active. It seems like it's a more active week than we would typically have around Jackson Hole. So make of that what you will. It's time for me to get going, guys. I will see you. Well, what should we put in for today's title? 20th today, hey? Let's make the headline today gold. Gold breaks new highs. That was kind of one of the more interesting things that happened today that I'll remember. This conversation was good. I don't know if you were the people that were, sorry, I forget his name. Well, then it was different here in chat. Ali, if you want to make videos, there's probably some good stuff in there where I explain that, right? But I digress. Time for me to get going. I'll see you guys tomorrow. In the meantime, stay